Hello traders, it's Samurai Trader here. Welcome to what are we, session 106. I just thought I'd just turn the camera on for a moment to see that for you to see that I'm actually a real person. So I'll leave it on a little while and we'll just see how we go. If I find it distracting, I'll turn it off. Now, one of the things that I get asked regularly is about my trading conditions and how I trade and my setup. I have 6 screens here. I have a custom-made standing desk, so I'm now standing at my desk here, and I've got a spare. I just want to show you this because you don't know what you don't know. I've got a special stool made up here that I sit or I use. Whoops, nearly dropped it then. I use a draftsman's chair to sit down, so that way I can get sit right up nice and high at my desk. And so I've got then that custom-made little aluminium stool for when I'm not standing. I can then put my feet up. The other thing that I do is I'm just redoing some of my charts, and let me just turn this around a little. It's hard for you to see there, but this board behind me, I normally have it down when I run my webinars, but I just thought I'd put it up for today, so I'll readjust that so the light is not shining in your eyes. And what I like to do is just have my charts on there, just some of my various high probability setups, along with my chart book that I'll review every day. You see, trading truly is a pattern solving exercise, and so what I'll do is in a quiet market, I'll just go through my charts, just sit back, review my charts on the wall, just to remind myself exactly what I'm looking for. Then of course I've got my trusty trading journal, and so 240 page journal. I've now got over 70 of these, and so as I trade each day, I then take notes in my journal, just the good, the bad, and the ugly, or any ideas that I may have. On top of that, I have a little stand here, a cork board, where I've got many of my trading rules and just other little abbreviations and little reminders and things that I need to be doing. And so I just have it there and I just review those as I'm trading. Now, what I don't do is I don't watch TV, don't have CNBC on, or can never be correct, I think it stands for. So I'm really want to be focused when I want to get into, if you like, the trading zone, which is really important. Now of course in a moment I'll quickly talk about a membership, but you get all of my charts and all of my setups, which you can print out. Many of my members, they go down and just get these printed out. I've got a color laser printer here, but recently, actually, because of the quality, I've been going to an instant color print place around the corner. But it's just great to review your charts on a daily basis, because trading truly is a pattern solving exercise. So let's get into this. So I call this the $1,000 a day challenge. Now it's interesting, I've been talking to my members about this, that I've actually increased my target from $1,000 to $1,500 a day, and I'll explain my methodology in a moment. We're going to look at the charts and look at a trading session here. I think, look, I can't remember, it was 20 minutes of trading after commissions up 1,500 plus, but I'll show you that and we'll go to the charts. But what I also want to explain to you is my trading philosophy. I believe get in, get out, get paid, but I've got a slide of that for you in a moment. Now if $1,000 a day is not enough for you, just increase the amount of contracts if you do trade. I trade 5 lots on the NQ. On the Russell or on the Dow, I will trade up to 10, but typically 8 lots. And I just look at the amount of funds that I need to commit for any one position. Now what I do cover in these sessions, you can apply to Forex, futures, stocks. It really doesn't matter. I tend to really focus on the NQ, sometimes CL. I do love oil, the Texas tea, and also recently very focused on the Russell. And what I look for in a market, as you will see, I'm looking for the waves. I want to surf those waves. So let's and actually this is in, I just need to pull this down a little bit so I can actually I can't pull up. Let me try this. Sorry everyone, I can't get the disclaimer. Here we go. My disclaimer was hidden. Okay, so we do know there's a risk in trading. Don't trade with money that you can't afford to lose. I recommend you stay on the simulator until you're consistently profitable. But once again, as you're watching the recording, you can read the disclaimer in full. If you haven't already, you can download my ebook, The Truth About Day Trading. Now in a moment also I will be referring to a spreadsheet which you can also click on the description link below and you can download the spreadsheet I use, along with a short trading video where I'm teaching you how to actually use the spreadsheet correctly. Don't forget also to please click on the subscribe button so you can be kept up to date with all of my videos. Even better still, become a member. I run both a live coaching room 2 evenings a week, 6 p.m. to 8 p.m. every Tuesday and Wednesday evening Eastern Standard Time, and also I run a live trading room, so I've got about 100 traders in a live room. So for $197 you can get all of my indicators. There's over 200 hours of online training. It is extremely comprehensive. All of my indicators, did I mention that all of my indicators are included? On top of that, you also get 8 coaching sessions. That is, you can attend those 6 p.m. to 8 p.m. sessions. You get 8 of those, 1 month of coaching, all included in the $197. Traders, there's nothing else like it. I've been trading now for over 28 years. Anyway, look, I won't go into it now. This is not meant to be a sales pitch. This is all about how I trade. So I just want to mention why scalping works. I consider myself a scalper. I love to get in, get out. Now, we don't have to call tops and bottoms. What I want to do is take a small piece, leave something on the table for the other guy. Now, some people will say you don't want to follow the herd. Well, I love following the herd. I love when we've got momentum, but I'll turn a sharp right before they all go over the cliff. In other words, there are certain times when we want to stop trading a trend. So the concept is simple. We find setups that are in harmony with the trend on higher time frames. I'm looking at both an entry chart and an anchor chart. So I have 2 anchor charts that I look at. I want to make sure that I'm trading in the direction of those higher time frames. Now the other thing too is I really believe in POQ, the power of quitting, and that is, once I hit my target, if I hit it in 10 minutes, fantastic. If it takes me 2 hours, okay, I'll go 2 hours. That's pretty rare, but I want to get in, get out, get paid and finish. Now if you're a young gun, I'm in my 60s, I'm happy to finish early, but you might want to continue all day. I also prefer to trade the after hours market, what we call the Globex session. Now I'm actually recording this at 12:58 a.m. Central Standard Time. Now the Globex session actually opens at 6 p.m. or 5 p.m. Central Standard Time, and it goes all the way through to the London session, which is 2 a.m. Central Standard Time, and of course then New York really starts to fire up at about 7:30 8 a.m. It's really underway Central Standard Time. So we've got that session before New York, and I love that session because it's so much slower. And yet with the markets that we trade, if you're trading 10 lots, no problem. Look, if you want to trade 100 contracts, all right, you really need to be in the New York session. But if you want to trade 10 lots or around 10 lots, no problems at all trading during the Globex session. Now I want to go through and very quickly set some parameters on some goals, and as the late Stephen Covey says, begin with the end in mind. Where do you want to take your trading career? Because when the why you want it is big enough, you'll discover the how. And I'm going to be showing you, and of course many of you have seen many of my videos where I trade both with trend and counter trend, but I will specifically point out the trend trades where I really recommend all new traders stay focused on trading with the trend. So we want to set some goals. Now at times some traders will say, I don't believe you should be doing that. Well, you know what are we here for? I've got I've got 16 grandchildren. I've got 7 children, traders. I need money, and I need to know that I've got goals in life and things I want to do, and I want to, we travel regularly and that sort of thing. So having a target, I think, is motivating, and I think all traders should have a target. Now, I'm not talking about being unrealistic. None of this nonsense of $1,000 a day per contract when you first start trading. I teach traders, start on a micro, go to a larger account, but we'll see that in a moment. But you've got to have a goal, otherwise you're like a ship without a rudder. So let's just say here that, say if you do have $5,000 to $10,000, I would say if you're going to trade like what I'm about to show you here, you can start on the micro account, which is the micro NQ, where you only need $400. Let's use the market's money to build your wealth. Get rich slowly, and I'm not talking about years here, as you're about to see. So if you start out with trading one micro contract where you only need $400 and you're going for $20 a day, within 11 weeks you've actually got around $4,000 you can now roll over. So in 12 weeks, actually, you've got 4,600 you can now roll over. Basically at the end of 11 weeks, you're there. You can now roll over and start trading the big contract. Now that's when you then, because the micro is 10% of the value of a big contract, you can now start trading the big contract 200 a day in a further 12 weeks on the basis that you net $200 a day per contract. You're earning your 10,000 a week, and you've got an account size of just under 50,000. Now I do have to say that my results may not be typical. I've been trading for 28 years. However, what I've put together, as you're about to see, are rules-based trades. They're pattern-based, and we as humans are very, very good at identifying patterns. Unfortunately, you can't see it here. These are all patterns that I'm looking for. Every single thing I'm looking for is a pattern, and they're very easy. Do we have a retracement back to the EMA? Has the candle closed over a certain EMA? What are my 2 core indicators telling me? It's not rocket science, okay, but it is about still getting some screen time. Now I do have to point this out. Where I've got here, by the end of week 12, you're trading 11 contracts. You only start trading an additional contract every time you build your account by a further $4,000. You are using the market's money. None of this risking 5% either. The maximum we ever risk is 2% ever, and as you build your account, you drop that down to 1.5 and down to 1%. You have a lower return on equity, but you stay in the business, and it makes trading certainly a lot easier. So maximum of 2% risk, and you can see where you are. Now the bottom line is here, traders, we look at this 12 weeks, our account size, we roll over. It's taken us 24 weeks for potentially a life of financial freedom. Now I do want to say this, on top of that 24 weeks, you do have to allow 6 to 8 weeks trading on the simulator. You do not go live until you've at least mastered the setups. And the thing is, you start off with 2 or 3 of my setups, all trend following. And the couple that I teach you, well actually I teach you over 15 setups, but the main ones that I teach you are trend following, and they're all related to each other. So you learn one and you're learning the others at the same time. Now the question then is, how do we actually achieve 200 net after commissions and after losses per day? Well, here if we look at the 6-step scalps for an example, I'll explain what the step is when we get to the chart in a moment. Okay, you only need 4 of those a day after any losses. After any losses, you only need 4 of those. Okay, that's all you need. And we get those from what we call good trending 34Bs, 55, 89s, and 200 bounces. So here is the session that I'm basically going to give you a recap, and we'll go before the charts and after the charts, just so you can see what actually was happening before and what happened after. So on this particular one, after commissions is up 15.98, that was 12 minutes of trading. Now this is crazy trading. It was actually, look, a little too fast even for me. I'm a scalper, but you know, I like to be able to manage my trade on the charts. So in this particular case, I was using a fixed stop of 14 ticks, a target of 20, 7 trades, 4 wins, 2 break evens, and 1 loss. Now because it was that fast, I was using market orders, where normally I'll use a limit order, a stop limit order. So over here I had nice divergence here, and I'll show you this actually on the chart, and then I'll just explain these here. So let's go to the charts where we can actually see those setups. Now before we do this, let me explain exactly what I'm looking for from the right hand side. Now here I'm using a Renko chart. Now you can use a tick chart, you can use a range chart, a time-based chart. It really doesn't matter. I still use tick and I use Renko, but my main chart now is Renko. Now with Renkos, they smooth out price action, and sometimes they hide a little too much information, and I miss out on some trades. However, what I lose on the roundabout, I pick up on the straight. That is, it just makes trading so much easier. So just here, as we're rallying up, see this black line up here? This is an EMA on a higher time frame. I mentioned I like to use an anchor chart. So with my anchor chart 1, and I've just got it displayed here just to give you an idea exactly what I'm looking at. So if you look at right here, can you see that there? So this is my anchor chart 1 just here. Now this is a no-brainer trade, and I actually call these a T12, and you'll find I throw lots of T's around. It just simply means trade, the trade type. It's a T12, very high probability. So in taking that trade, we're usually expecting price action to come down and bounce here. Now one thing we didn't pull up, and have I even got it in that PowerPoint? Have I not got it there? Gee whiz, normally, no I haven't. Normally I bring it up, but what I'm looking for, and to be regularly reviewing my charts, see that dot there? That's a pivot. I'm looking for my pivots, the open, high, low, and close of a day, the Camarilla pivots as well, and the swing highs and swing lows, and the 89 and 200 EMAs. And so I've got them all on a cheat sheet naturally. So you're looking for these regularly. Why? You bounce off these day in, day out, dozens of times a day. So as we come back, this by the way is a 200 EMA. Whenever you're retracing back to a 200 EMA, always expect a bounce. We don't always bounce, like, well here we've gone through it slightly. However, regular as clockwork traders, you will bounce off the 200. And so just there, this would actually be, for members watching, this would have been a 3B. Now one thing I want to point out here, and I don't want this to go past 30 minutes. Whenever we take a trade, we always say to ourselves, do we have blue skies ahead? Meaning, what's in front of our trade? So we can see just up here, we've got a pivot. Just like up here, I've got a major EMA. I know that these act as price magnets. So there's a very good chance we're going to bounce off these levels. So what that means is, if I took this trade, I would want to be at break even or taking profits at that level. And here's a little reversal here straight away. Now one thing I failed to mention is these Renko candles, these are 4 tick Renkos, which means from the low to the high, that's 4 ticks. So each step, as I call them, is worth $10. Now you can trade a 4 tick during the Globex session 95% of the time. but once we head into the London session, we might jump up to a 6 tick. As we go into the New York session, we're usually going to be up to the 10, 12, or the 16 tick. I just don't like really the really fast markets. I call the New York Open the killing field. So you just want to be really cautious in crazy markets. And also what it means is the higher the time frame that you're trading, the larger the stop loss that you need. And that just reminds me, one thing I meant to show you here was the effects of, because you'll see in a moment, for once you get your feet wet and you're into it, $300 a day, you got the potential there within 8 weeks of hitting your $12,000 a week. And remember, you're only trading an additional contract each time you get 3,000 in your account and a 2% risk. The reason I bring that up is that, as you're about to see, we get trade after trade. Now that one there, that one there was a no-brainer. Now what I was about to say was, I will usually go for a fixed target of 7 steps going to break even at +5. Okay, so just here I would not have been in here till up here 1 2 3 4 5 6 7. So I would have got my $70 per contract out of that trade. Now I come back down. Now I've got another trade. For members watching, you can see there we've got a T10. So we'll go long. This is a danger zone at the moment, though I will say this, it is a bit of a danger zone because well, we've made a higher low. So no, look, we might be all right. I just can't remember what happens. We are probably another 10-15 minutes before I take my first trade. So up we go. So that was by the way, that was it was a T10 and a 3B. Here, this is a no-brainer. Why is this a no-brainer? One of my members, he calls this the 3 musketeers. It's not quite his pattern, but it nearly is, where you got 3, and these white paint bars, this is called the super scalper, by the way. So if we were to take this trade, see this up here, that would be our target, right? So there we romp it in and we now get a bit of a bounce again. Okay, let's sit this one out as we come back. I think we get a trade. Now this one here, this is a no-brainer. This is one of the 34 B's. So we would take this. I'd be after my 7 steps. Thank you very much. And once again, 1 2 3 4 5 6 7 8 9 10 11. That's a $120 move. Why not go for 120? Well, I've got plenty of time. The market, by the way, is moving fairly quickly. On my dome, my matrix, it automatically sets my stop loss, automatically has my break even, automatically has my target. So get in, get out, get paid. Now you may choose to trail if the market's slower, but I much prefer just to have fixed targets unless I'm selling into an area of support or resistance. If I know I've got a pivot ahead or below me, it might be a standard pivot or a Camarilla pivot. If I know I've got a high of day or an open, high, low, or close, all of these plot automatically. Now on every platform you can get these indicators, they just all plot automatically, but it just makes trading so much easier. All right, back to this. Here's trade 1. This was a reversal, and this is what I call a 2D. Now, was that the 1 by 1 tick? No, it's all right. Maybe it was the next day, because that there, when I normally enter a trade, I remember what I did. When I enter a trade, let me explain my stop loss. Say if I entered here, I automatically have on my matrix, on my dome, a 14 tick stop loss. Now I like to have my stop 1 tick below the swing, 1 tick above the swing, 1 tick above, 1 tick below, except in a runaway market. If a market's really pumping, I'll just leave my stop for that relevant time frame there. So then that come back, but I just remembered I was using a fixed 14 tick stop, which put my stop up here. It then turned into a little double top. For members watching, you can see the T10 just there, and down we come. Thank you very much. Trade number one. I then had a standard 3B. This is one of these, just a run-of-the-mill trade entry. Yes, there are rules to it, but it's a pattern. All of these are patterns that we're looking for. So in here, up we went. Now here, if I remember correctly, one, two, I wasn't quite out of that. I think I was targeting the high of day here, and I can't remember what I was doing. I think I was going for the high of day. So remember before I said I'd usually have a fixed target. So what I'll do is usually I'll put in just increase my target from 7 up to maybe 10 steps, and actually that's what I did. Okay, I'd forgotten that. Okay, so that's why my target is way up there. Now I would have been out with 7 steps just here, and then if I was, there was another re-entry just there. Okay, so I had a re-entry just here, which I wasn't in because I was still in that one. So let me just explain increasing my target. So if I've got a really strong price magnet in front of me, a low of day, high of day, a major swing low, major swing high, like a major swing high here, I'll increase my target. I'll still go to break even usually at the same time, but I want to squeeze more out of it. Now I've got trade number 3. Now I remember this this was actually what I call a big picture double top. Now a big picture double top here, traders, is when you look at your anchor charts here, and this is only looking at the anchor, I call it the anchor chart 1, and you can see there it's much more obvious that I've got a double top. And thank you very much. Down we went. Now just here I got out at the 89, so I think we only picked up 5 steps there, what I call 5 steps. We went to break even. We then had another trade, just a plain vanilla 2B here. That was a break even. So just there I had 1, 2, where is it? If I got the, just trying to think, I just can't remember what happens after this, but anyway, I had that was a break even. This is a break even, and then I had a loss. Let me define break even for you. Break even is once I hit 5 steps, 1, 2, 3, 4, 5 from where I enter, that is, automatically I go to break even plus 3 ticks. So once I hit 10 ticks net profit, I go to break even plus 3. Okay, and what will then happen, as happened here, it bounced and happened here, so I was stopped out at break even, and at least it covers commissions and I pick up a tick or two. Now this is where I got stopped out. I'm in an uptrend, everything's looking great. Look at my anchor chart 1, everything's looking great in a nice strong uptrend. Didn't have a lot of divergence at that time. I jumped in and stopped immediately, bang, straight away stopped out. But then I had, if I remember correctly, was that a T10 on the anchor chart? I can't remember what the setup. Whoops, sorry everyone, let me just quickly adjust that back. Whoops, I'm going to pause this because I just jumped ahead too far. Just a sec. So yes, I jumped in here, being a T10 just here, bang, straight down, got my oh, that's right. So I went for a slightly larger target down to the pivot. Now this is a really interesting trade here. We call this a T3. Now here, when you have a T3, we don't have to have, it's a reversion to the mean setup. It's where you've got like an elastic band being pulled back. So right here we've got a pivot bounce and a T3. So thank you very much. Straight after, hit the full 7 steps as well. So when I've got a T3, a mean reversion trade, you get them all the time. There's a set rule to how we trade them and what you're looking for. It's once again, it's just a simple pattern, and very high probability, but especially when you've got it as a pivot bounce. Now what happened then? We then rallied up. Okay, so up we go. We then get a pullback. Let me give you a really, and why we're here, and I will finish up on this one, because we're running out of time here, but I just want to show you this just here. This is what most traders will do. So we had on the entry chart, we rallied up and we then had that pullback, had my super scalper there. Let's go long. I want you to look over on your anchor chart 1. What are the candles showing you there? What I've got right there, traders, are 2 red candles. After I have a deep pullback, what I look for on my anchor chart, I look for the candle to close back in the direction of the overall trend. What that does is gives you a confirmation, because on the lower time frame you get a little ripple. Oh, let's jump in on this one. This is looking great. Higher high, new higher low, and bang, stopped out straight away. Okay, so by doing that, it keeps you out of so many losing trades. So I've got a bug attacking me here. So just there, that was also known as a 2B. That's another 34B. Now the thing you've got to get used to also doing is, here's what I just do. Just very simply, I'll scroll my charts down like this. What's in front of me? Do I have blue skies ahead? And I just remembered, I just turned off the open, high, low, and close for the current day. In actual fact, let's go and quickly look at where we are right now. So we go and have a look at this right now. So this is once again, and this is 115. You get it like this all day, all night for most of you in the US. But here you've got here once again, what can you see here, traders? Well, for a start, T3 once again, we won't go into that, just a plain vanilla. Look what happens to price here. It pulls back. We're hitting the major EMAs. Down we come, we pull back. What's the probability? We're hitting the major EMAs again. Thank you. Now we form a little, we call that a bet the farm, and down we go. What's that there? We got a 34. We get a pullback. What's the direction of our EMAs? We're in a downtrend. Away we go. Now you can look at this and say, oh, I'm cherry picking, but traders, this is live as I'm speaking. This is just the run of the mill trading that we have now. This is where then you have a danger zone. Let me just give you another little tip, because you just had another T3 just here. When you have, and you can see just there, I have 2 pivots right there. I have a standard traditional central floor pivot, and I've got an S1 from the Camarilla pivots. Be careful of whenever you're selling directly into a pivot. Why? You bounce off them all the time. Now what if we were up here? That's fine, because we got room down to the pivot. Let's get to break even. If we punch through, great. If we don't, we've locked, we're at break even, we picked up a few ticks, and we can live with that. So be very, very careful whenever you're around at the pivot. Now as we pull back, what are we expecting up here at the 200? Guess what? That's called a 200 overshoot. I look down here, I've got a wee bit of divergence, and now we've got complete divergence. We've now got our short. Now with that also, let's pull up the anchor chart 1. Let's have a look at that. Okay, so see on your entry chart you had a wee bit of divergence there. So see how you made a higher high just there, you made a lower high. Divergence on your entry chart is the weakest form of divergence. What you want to see is divergence on your anchor chart. Whenever you cross, sorry, I'm getting attacked by a bug here, but whenever you cross your 200 EMA, that will quite often identify the start of a new trend. So you've got to be very careful around the 200. So here we had what we call a I call it a T19. Probably 80%, 90% of T19s you bounce off for 34 EMA. Okay, you'll rarely see me take a T19, but what I do want to take is a 2D. Look at my MACD dropping away like a rock there. look over here at the MACD on my anchor chart. Can you see that there? So what we've got here is double divergence, and in fact I was just preparing some slides for coaching in the morning in the session. Well, actually it's tomorrow morning my time, but Tuesday night Eastern Standard Time. We're just running through divergence trades. So you can see Monday the 22nd of July, just to run through classic divergence setups that we have. So here, note the angulation. I've got here another one just pointing out. Now all of these indicators I have for every, basically these are common indicators you can set up on any platform. What I don't have for every platform is the MACD BB. I've only got that for NinjaTrader 8, by the way, but you don't need it because there's a common everyday indicator on every other platform. It will basically do exactly the same thing. Now what I'm looking for here, I love double tops, and look at the timing there, 22:22. So that's basically 8 p.m. in the evening. Is that 10 p.m. in the evening? Yeah, 10 p.m. in the evening, 10:22. And so you got these beautiful trends. So you get home from work and you can trade. But here, just teaching members how to look for divergence trades. Now see these Y's. These are all yes trades. In other words, to take the trade after divergence. So for a new member, I'd be saying to you, a new trader, don't trade divergence initially. All right, divergence always looks great after the fact. I trade it every day, but I've been doing it a long time. But these ones here, there are 3 indicators that I'm looking at on a higher time frame that say take that trade, take that one, take that one, take that one, besides the divergence trades. And by the way, this one here, this is what I call a zero lag MACD. But traders, look, I'm well and truly over what I wanted to go through with you. Look, trading truly isn't, it truly isn't rocket science. It's about taking the time to learn the patterns. That's all it is, and that's why I've got them normally up here or in the book. And so it's just a matter of reviewing your patterns and understanding whenever you get a reversal coming back to your major EMA. Okay, is my EMA trending? What are we expecting? A bounce. Then what are we then looking for? A, B, C. Traders, come and join me for $197. You can join in 8 2-hour coaching sessions. It's a private group coaching session. The sessions are recorded, by the way, and you can watch them as many times as you like. Also includes there's I think 36 PowerPoints now. There's literally seriously there's hundreds of handouts which I've done over the years. I've been doing this for a long time now. But once again, if you're a brand new trader, we get you going on just 4 specific things we look for. Okay, just 4 specific trend following patterns. Traders, hope to see you in one of my classes. Otherwise, I'll see you, well, hopefully you'll see me in my next video. Thanks, traders.